we call it the shadow. This is called low shadow, and this is what we call upper shadow. Now, basically what happened is that at the low shadow, the selling pressure is actually greater than the buying pressures. Sorry, the buying pressure is greater than selling pressures, and then on the upper side, it's a selling pressure more than the buying pressure. Okay, so this is basically the whole candlestick here. We have 4 informations here. We have the open price, the low, the day low, the day high, and then the closing price. So basically, when you look at this candlestick, those people who are using candlestick chart, they'll know what's happening within that day, right? How's the psychology pans out on that day. Now, this is the red candlestick, or we call it bearish candlestick. So basically, the market opened here, and afterwards at the 5 p.m., it closed lower than the opening price. Okay, so on this day, we can see that the bears actually are in control. All right, so this is actually a bearish day. Sorry, it's a bearish and not bullish. Wrong words here. Okay, then on this is actually a bullish candlestick. Now first, after I share with you the basic patterns, I want to share with you the a bit of important patterns that we see are quite frequent in the market. Now, one thing is actually this hammer. Okay, what happened is that the market opened at 9 a.m. Then on, the stock actually went down on the back of a very strong selling pressure. Right, then on, he hit the day low, and then around 4 p.m. right, or before market close, it actually have a strong rebound. Right, and then it closed at 5 p.m. So what you see is that there's a very long shadow here. So there are actually 2 things happen that day. Firstly, there's a lot of people are selling, and then there are a lot of buying as well. Okay, so eventually when the market closed at 5 p.m., those who bought, all right, they actually make money. All right, those who are sold, actually they sell too low, right? So this actually give us conclusions that on that day, the bulls actually have more advantage than the bears. All right, the buyers or the buying pressure is more than the selling pressure. Now over here, that's actually very important. Important is the next day. Next day, what we want to see is that the stock should go higher, because on this day, there's a lot of buyers here. If next day the stock actually continue to go lower, then this buyer means that they buy at the wrong price, and then tomorrow they have actually a very strong selling if the lower shadow is what we call being breached, right? So this is usually when you see a hammer, we need a next day price actions to do something we call confirmations. With a hammer itself, it's not 100%, we can't confirm that it will reverse, right? We need a confirmation day. Okay, but if you, for trading purpose, let's say when you become a more advanced experienced trader, right, usually this is what you can apply your 2 lots concept scaling in. When the market actually going down, you think that this is actually lowest, what you can do is actually you can buy 1 lot, and then when the market rebound, you can add 1 more lot, right? Now, for instance, you think that the market really went down too much, like last few days, we saw one stock actually came down so much, right? A lot of people, some will say that, should I go and pick the bottom, or should I not, right? Usually, I just tell them about this 2 lot concept, yeah? So let's say you buy at low, right? You anticipate that it's going to rebound, but however, it actually went lower, you can actually average 1 time, maximum average 1 time, and then if the thing go some more lower until it breaks your psychological barrier or your stop loss level, what you need to do is stop loss. Yeah, and usually I will not hold a positions losing position overnight. Prefer not to do that. So if you have 2 lots and both are losing money, at least you cut 1. You want to hold for overnight, and then the next day you rebound, you can actually add. Right, never actually have 2 lots losing positions overnight. That's actually quite risky for me, right? So that's actually how you actually can use this 2 lot concept on to actually trade on the hammer. patterns, and this hammer pattern actually quite frequent in the market, right? So I hope that I can share with you this. And then on the other thing I want to share with you, the second patterns is called piercing patterns. Now basically this is a bearish day, red color, and then on the next day, what happened the next day? Look at here, the opening price. Because the previous day is a selling day, the next day the stock actually gapped down first, right? So this is actually a very typical bear market, right? Yesterday was quite bad, and today the thing just gapped down, right? But when the market gapped down, it did not actually went lower. Instead, it actually rebounded from there, right? And then it moved into the body of this black candle, and this is what we call piercing patterns. And this is a very frequent pattern and a very strong pattern as well. Okay, but same as a hammer, these two, hammer and piercing pattern, we need what I call a confirmation pattern. Okay, so this is with the confirmation day, where when I see this pattern on the third day, I think that chances of reverse is very high. That's where I'll definitely at least I'll buy one lot here. So come to this pattern, these 3 days patterns. I repeat how I use my two lots concept. So when it actually came down, right, either I buy at the low, right, I hold one overnight, or on the second day when there's a gap down, right, and I think there's much more lower, and that's where I buy my first lot, right? But then on, I was never add my second lot if it go down, and then when it rebound, that's where I actually add another one more lot. Now, the thing about this thing is that there's one more key point here, is that this black candle must have a very high volume. Why is a very high volume? Means those people who want to sell, they would have sold on this day. So I think that the sellers have actually sold off, right? I think that the bear has actually sell everything, right? And it should nothing more left to sell. So this is why actually I try to pick the low, right? We call it the there's a term like exhaustions, yeah. So we have to wait for this oversold thing to happen. So how do we know that there's oversold? Is when the black candle, prior than this, there must be coming down for at least 3 or 5 days. Not first red candle is oversold, no. It must coming down for 2 or 3 days. Then you see the fourth day, very long black candle with very high volume. Yeah, afterward I'll show you some example, right? And then on, you try to actually buy the lowest or this day when the volume actually taper off, the selling pressure tapered off, and then you add another positions here. Okay, so this is a bullish piercing, and then I have one more. It's a bullish engulfing. Now, bullish engulfing is a very strong reversal pattern. Usually, also this is a very long black candle, and then on the next day, you see the bullish engulfing and the piercing pattern. They have one common thing: is the gap down. You see here the gap down, right? So in a market, whenever you see a bearish market, there's a gap down. First thing first, you must start to think: can we become a bullish piercing, or can we become a engulfing afterwards? Yeah. So this is all through experience, lah. If you have no, then never mind. You can wait until the about 4 p.m. on the next day when the pattern form. Then you can clearly see that okay, that is actually a bullish engulfing. Now for bullish engulfing, this day itself is a confirmation day. It confirmed that there is a stock have actually reached a low, all right, very high chance that it could reverse upwards. So this is a engulfing, okay. And lastly, we have this another pattern with black candle. This day, instead of gap down, it actually gap up. So this candle is what I call bullish marubozu, right? If you look at the market, this is something that are very, very, I would say rare. And then when it happen, it's actually a very strong pattern. Now this marubozu, why I say it's rare? Because this is a bear market. Imagine that market is actually going down, and then instead you gap down, you actually gap up. So when you gap up, some of the people who actually sold yesterday, when you see the gap up, they actually regretted. And how come I sold yesterday very low? Today the thing gap up. Now I'm not sure whether you've been through this before. Malaysia market is so bearish. Then on the US market also very bearish. Then the next day you think that, oh, gone case, we should be very bad. But instead, the other way around, Malaysia market actually gap up, or your stock actually gap up. So this is where they gap up, or of course there's only two directions it can go, like either go up or go down, isn't it? So by the 5 p.m, you see it actually went up, and it actually engulfed the whole bearish candlestick. So this is actually a very strong bullish marubozu, and by right there will be some bullish momentum follow through afterwards. Yeah. So this is how the four patterns that I want to share with you. Okay. So when you see all these four patterns, right? Remember what we have learned today. All these patterns are telling us that the market may have reached a bottom, and that's where you can actually buy on your first lot, right? Now, if you become more experienced, you can actually buy your first lot when the correction is happening, right? When the market is coming down, you want to buy at the lowest. Okay, so make sure that no matter what you buy, you have a two-lot strategy. I call it scaling in. Yeah. So remember, just repeat again, the first candle usually have a very high volume. This is where the oversold will happen. We want to wait the oversold to happen, then on we initiate the first lot. Yeah. And or you can wait for the volume tapering. Yeah. When the volume start to taper, the selling pressure get reduced. That's where you actually go in on your first lot. Now, you think that this is still not still too risky, you can actually wait for the third volume, the third candle. When the trading volume increase, when the breakout happen, you can actually initiate your first lot, right? There's no perfect answer to this, but basically this is what happened when the market actually hitting the bottom. Remember what I said just now? When we are correct, we take profits. When we are wrong, we take cut loss. Market is always here, right? Just be nimble and spread our eggs around, and then we can buy more stocks and trade more, right? Okay, so that's how we make money in the market. And remember this thing called scaling in. I think this is our second event. In fact, since this year, whole year, I also always share with my clients, people like yourself, always scaling in. Never all in. Yeah. So remember this: scaling in versus all in. Okay. All right. So this is the three candles that I shared with you just now, right? This is the selling, and the volume is the highest. Then on the volume tapering, and then on it start to actually increase again. This shows that the selling pressure is over here, right? So let's look at some of the example over here. So this is where they actually, one of the counters actually went down, right? And you can see that long black candlestick. So usually I look for the first sign is a long black candlestick. This thing you can see very clearly. Yeah, those stock actually have came down so much. I can tell you that when the stock came down so much with a very long candlestick, and that's where I get excited, because I know that it will rebound happen soon around the corner. Yeah, and then I wait for the volume to taper off, and then the first candle, that's where it shows me that it can rebound. Then on over here again, same thing here. You see the market is actually correcting. What you can see is that at the lowest here, this black candle, apparently it still the body is the longest, or visually you can see this is actually longer than the rest of the peers. So this is where I know that it's about to reverse, but I can't tell which day. Right, then I wait, right, and then you see that's where the hammer happens, and then followed by what? White candle with high volume. Yeah, so that's where it found the bottom, and then it starts to sideways and it move up again. So this is how you actually wait for the opportunities to happen. I remember I said one more time, very long black candle. So I hope that from these sessions, when you see a long black candle, you must be very happy, because you know that market is going to hit bottom soon. When? Do not know, but don't hurry. Wait for the volume to taper. White candle happen, then you know it reached bottom. Okay, and then on this is another example. It shows you that marubozu, a bit rare, right? But when it happened, it's a very strong signal. So you see here, the market is actually correcting without any sign. It actually gap up and move up. Then on another white marubozu, high volume. Then on here, same thing as again, it's corrections without any sign, it just gap up with long white candle. So in this example, what it's trying to tell us is that as long as after a white marubozu, it did not break the support, right? What we call higher low, right? Then the trend may have changed. Yeah. You see, we do not want to be like 100% correct. When you look at this, you know that you're almost there, right? What you need to do is scaling in, right? Remember, don't put all the eggs in one basket. Scaling in, not all in, right? So when you see this, even there's a pullback here, this 3 little candlestick, there's a pullback here, you can consider to actually initiate your first positions, right? And then on you add on another, and then it move up, and you make your money. Okay, so that's how you do. So in all these things, after you learn, I tell you that what you need is actually a good screener, right? A screener like a trade smart screener, right? So afterwards I'll show you. And now this is another example. You see the market actually coming down, a hammer happened, and the next day a white candle with high volume. Now this one is not a straightforward hammer. It's actually an inverted hammer with a very high volume, right? Then on the next few days, volume taper off, and then another white candle with high volume. Now, just now I show you all our 3 candles. In fact, you can actually think about them as a combination of 8 candles, 7 candles, right? The number of candles is not important, but the 3 phases, right? High volume, volume tapering, and then the volume pick up again. So that's where I want you to understand. And then through these 3 different stages, you can actually scaling in and then right on the rebound, right? So that's what I want to share with you today. Okay, right. So this is a slide I shared last week. I share with you one more time, right? When the high volume coming down, that's where the selling climax happen. That's where the oversold happen, and then wait for the volume to actually string tapering, right? And it can be a lower low, right? Lower low means a double bottom is happening, right? In a bigger chart, we call double bottom. In a smaller way, we call bullish piercing may happen, right? Gap down, lower volume, sideways, and then it break out again, pick up again with a high volume. The concept is actually very similar. Yeah, you have a very big time frame, 3 months, or very short time frame, 3 days. Yeah, the idea is similar. Okay, so now let's me move over to the trade smart. Yeah, so this is actually the trade smart. Okay, let me. Okay, I think you can see my trade smart. Yeah, so this is a trade smart, and basically one of the shares today, you can take a look. Is actually one example is like CMSB, right? They have actually a strong selling over here. Then on afterwards, they actually are sideways, and then they start to climb, and then subsequently their volume are tapering. Okay, we're actually sharing here. If you have any stocks questions, right, you can always post in the Q&A box, and then we can pick up from the Q&A, and then we see what are the questions you have, right? So this is actually how I see CMSB, and then on. Of course, today it starts to actually move a little bit, right, and then I do not know what's the closing price afterwards, right? But based on the chart patterns, to me it looks good, right? And then important is that I look for all these high volume day like this day, right? This is where the selling happens, right? And then after the worst day, and then it starts to actually rebound and move upwards. And then during here, right, if you look carefully, that's actually what I call lower low, right? And then turns up, right? And before you realize, the stock actually just climb higher. So if you look back on this CMSB, actually, what actually make us more exciting, or next time we see a stock, right? The more important is here, okay? A strong selling, long candlestick, and then subsequently it reverse out. Okay, so that's what you need to pay more attention to, right? And then write on the thing. There's another stocks I also want to share. Like last week we did mention about DNEX but last week DNEX was more on a breakout play, right? But after we mentioned about DNEX, okay, not bad. It's still within our range, right? So normally what I do is I have a breakout range, and then I also have a cut loss range, right? As long as the stock doesn't go below my cut loss, right, I will actually trade between the range lah. Yeah. So when it will go below, then it's good time to actually pick at a low, and then when it go up, of course you sell at the high. Okay. So every stocks actually you come up on hand, and you must always set your cut loss point lah. Yeah. And okay, there's another counter that I also want to just share with you. I think this actually looks interesting to me. It will be this Permasoto, right? So what happened is that there's actually a high volume here, right? And then it actually came down down for 2 days, and afterwards the volume actually tapering off, right? And recently the volume start to pick up again. Okay, so that's actually when I look at this, right, I think this is one of the patterns that I look forward to. So I'll just follow this stock. If it did not break below 155, I'll continue to monitor this stock, and I think that upside potential is there. Okay, and right, so these are the two stocks that I want to share with you. Of course, if you are you can post some of the questions here so I can look at. So one of the audience, Mr. Karim, is asking which one reversal candlestick more profitable. Actually, there's no one most profitable reversal candlestick. There's most profitable traders. Okay, but of course, you say which one is the strongest signal. I think Marubozu will be one very strong signal, right? If you want to go on a breakout, Marubozu is good, and then but I also like piercing patterns, right? Reason because the piercing pattern there's a gap down. So sometime when the market gap down in the morning, right, as long as the selling pressure did not follow through, that's where I think there's opportunity to pick at the low, right? I also like hammer because hammer, when the market actually pull back, right, we can actually buy at a very low price. Okay, so that's what I like. So one of the audience asked about bullish piercing. Why do we need a confirmations? Because sometimes this what we call the why do we need confirmations? Because confirmations will tell us that the bull are totally 100% in control. If you have a bullish piercing, because it's a black candlestick with a white candlestick, as long as you can see this guy, right? Technically, you can say that this is something like bullish piercing, right? Look at Burma's Auto. You can see that the black candle is here, right? So today we are here 159. So if you look upwards, there's still some selling pressure here. Okay, people who actually sold here, or the bears, they are still pretty much dominate the sessions. So that's why if it would be good if this Burma Soto can actually break 170. If it break 170, means they actually knock out all the bears here, right? So that's why we need confirmations signal to have a more certain that the stock is going to turn upwards. Yeah. And another Pantech is a downtrend stocks. So basically, how I define a stock as a downtrend, right? Last week I shared with you I'm using this a technique called price channel. Okay, so if you break the supports, the blue color, if we break two consecutively, then it become a downtrend. That's how I define it. So from Pantech, it just break first time. So I don't consider that as a downtrend yet. But it's showing weakness sign because you see the 21 days moving average is turning down. To short term, it's actually a bit of bearish right now. Okay, now usually for this kind of scenario, there's a possibility that it may rebound to cross above, right? So let's see how it pans out. But I think that for definitions, it's still not a downtrend yet. But until it break a second, let's say it break not 49 here, yeah, it break 49, then I would think that this will consider as downtrend stock once it break this 49 level. Okay. Then on another exam is asking must a gap down for piercing and engulfing? Yeah, I prefer a gap down. A reason because a gap down, let's say you see the stock actually is coming down, and then there's another one more gap down. The fear is at the maximum in the market, right? So when the fear is there, people tends to actually sell the stock. And you know that when you're selling, there's always a counterparty, there's always a buyer in the market, right? So there's opportunity here. You want to buy at the oversold level, so gap down usually is a good indications that the thing actually went into oversold, but not necessary to tell you buy at the gap down. It's good that maybe after the gap down, the thing actually went down lower, and then we try to actually see where is the lowest of the day. Of course, we can't predict where is the lowest of the day, but gap down usually will tell me that there's a potential that at the end of the day, we could see a piercing or engulfing pattern. Okay. Mr. Faisal is asking, is this technique applicable for smaller time frame like 1 minute or 5 minutes? Usually I don't use indicators in 1 minute or 5 minutes. Usually I study a chart on the end of day, and then on you can go into 1 minute or 5 minutes to look for the what I call the oversold level. Yeah, look at the volume, and then you can trade in a smaller time frame. Right, mark out all the support resistance in a big time frame, and then go into a lower time frame to do your entry and exit lah. Yeah, and so Mr. Bashirun is asking, do we have a screener? Now this is my screener here called RGB Trade Smart. Okay, what I do every day is that because you know every day I myself have to come up 4 trading stocks idea, right? So actually how I filter my stock, basically I go through here. This is the there's a function here called alerts. Yeah, so I go over the alerts, and then they are basically bullish and bearish. So I can pick bullish, and then the screener will pick out all the bullish signal. But this is actually a live signal. It may not be correct at the end of the day, but at least it gives you some idea from 9 until 5 p.m. It's a live, right? So I just go through one by one every day, and then I see like this AGIA breakout, DNO, all right, RG, Nescon, right, and MGB. There's a lot of like this morning SKP, VS, right? So it's just the screener which tells you so that you don't miss the stock, right? So this is excuse me. This is one of the very useful screener I find. It's a live screener. Okay. And then CJ Century by asking by Jamaluddin. So now CJ Century, you look at the price channel still on the uptrend, right? And then you can see that there's 2 corrections day here. To me, this is merely more like a pullback. Yeah. It has not formed any like Marubozu yet. It has not formed piercing pattern yet. So just wait for likelihood. If you want to look at CGS entry, maybe there's a Marubozu to cross above the 21 days. Yeah, so that's what I wait. But honestly speaking, CGS entry now, um, the risk reward doesn't look interesting to me now. If you can drop further, then I think it look very interesting. The risk reward, because when it drop, right, you can actually buy cheaper, isn't it? Right. So risk reward wise, doesn't look very good now. But just see what happened in the market, right? We can't tell what happened at 5 p.m. later, right? To cross above the 20 days. Okay, right. Then on, we ask about penny shares. How do we see a trade on the penny shares? Basically, I do say them are penny shares. What I want is actually look at the low market cap. All right, there are stocks that actually are trading big cap but trading at 20 cents. But there are penny shares but selling at maybe a few ringgit also have, right? When you buy a stock, so you need to actually look at what the market cap right now. All right, maybe next topic we talk about market cap, right? GH, right? There's a Kok Heng is actually asking about this GH, right? So you can see that GH recently actually there's a pullback here, right? And then it's actually testing on the this support level, right? I think previously we did discuss about GH, right? So you look at the price channel. As long as it didn't break the price channel, I think uptrend still maintained, right? But so far there isn't any reversal signal yet on the GH, right? Merely on the pullback. But so far I also didn't see any strong Marubozu yet. Although this is a white candle, but the volume is really not high enough. So maybe if they can cross above 21 days, then we can see a strong Marubozu. Okay. And right, there's another asking about the QL, right? We can see that yeah, this QL is interesting now. It's actually going under corrections, okay? And but you look at QL, all right, there's one black bar here, okay? Another black bar, another hammer here. But the thing just couldn't stop. It just keep on going down, right? So in this instance, I'll wait until the if I can spot now this is the example that why we need a confirmation signal. Okay, on this day, this is a black candle, right? Eventually it moved upwards. Yeah, we may have bought here. Let's say you have listened what I said today, and then you decided to buy here. All right, and then what happened is that eventually it break low here. Then what will happen? Cut loss, isn't it? Right. Then after that, the thing continued to go down, and then you can see that these are all the black candles, right? Although there's some white candle here, but it just cannot move above the black candle, which means the black candle still in play, you see? So in these instances, we only have one cut loss, which is here lah. Yeah. When it keep on going down, right? We will not being tempted to actually buy, right? So that's actually what I shared with you just now, why we need a confirmations. So without confirmations, you can see that this thing just keep on the corrections mode, right? So I hope that I answer QL and also answer just now the confirmations questions. Okay. All right. So there are a few stocks here. Talking about a few stocks, I think I'll just keep. Basically, of course, one of the hottest topic of today in the market right now is Adakah, right? We can't escape, right? We need to actually talk a bit on this counter, right? And because today I know that I'm doing a reversal candlestick, right? So I try to look at the market. I want to actually put on my report, see any stock actually rebound. And honestly speaking, yesterday night I do actually consider about Adakah, but in my heart, I think that it's still premature to actually choose Adakah. Reason because I think that yesterday the volume is actually not high enough. You look at the traded value. Yesterday only about 70 million traded, right? And Adakah is 2 billion counters, two. And I think the volume compared with the market cap relatively small, right? And if there's a really a panic selling, we should actually expect more selling to see an oversold level. So that's the reason why I actually didn't pick here. I can't explain to you fully why it did not, but it's about volume versus their market cap, right? So look at their market cap, about 2 billion, and then the traded value only about 70 million. So to me, it's still the sellers are not actually fully sold off yet. I think that there's another one more round. It could be rebound, but I think that's we need to see more volume, then on we can see. True enough, today there's another volume actually came. Of course, right now it's trading at what we call a limit down threshold, right? So that's the lowest of the day, 82 cents. And tomorrow, all right, let's see what will happen again. All right, and right now you can see that it's actually very bearish. Okay, and so we wait for the volume to be tapered. And today is just half day. You see the volume today only half day already almost surpassed yesterday volume. Okay, I think by 5 p.m. right, likely this is going to be a very high volume. Probably next week we can see the volume being tapering. That's where we can start to actually bottom fish again. Right now it's still not a good time to bottom fish. Okay, so just now I share with you one very important thing is that volume compared with the market cap. Right, when we have opportunity again, I'll share with you about this thing called turnover. How do we look at turnover? Right, we leave it on the next topic again. Yeah. So looking at time, maybe we pick one more questions before I pass to Rose. So that's
Joseph, I can see some question about Tenaga. Can you just cover Tenaga?
Okay, all right. So we just look at the last one, which is Tenaga, right? We can see that Tenaga is actually going on a corrections mode now, right? And so you see that there's no piercing patterns, there's no hammer, all right, not even the engulfing or marubozu. So the corrections will keep on going on until we see those patterns appear, right? So it's still too early to say. I think the corrections will continue to happen, right, until we see a very long black candle. You see all the candle is still very small. Likelihood, you see, this is where the long back, you see the thing is coming down until you see a very long, the body is a bit long, then we could found a bottom, or interim bottom, a temporary bottom, right? So you can see that the body is still very short. Compared with these few candles, I can see that this black candle is still the body is a bit narrow, right? We need one long black candle, then you can see the bottom. Okay, so that's how I pick bottom lah. So I think for Tenaga, likelihood is still under corrections on technical perspective. Yeah.
Can we just answer another last question? CTOS, quite interesting.
Right. Okay, for CTOS, actually, there's a hammer happened yesterday. So I think that the selling pressures has tapering lah. So what we need the next is actually what we call a confirmation signal. It's in a white candle. right? So if you think that the selling pressure is over, you can consider to initiate your first lot here, because since there's a hammer here, right, you can actually buy lower. But remember, if you want to buy on the hammer, you set your cut loss at 180. So anything go below 180, then cut loss, and then the thing likelihood to have more corrections. Okay, we can't, based on what I see now, there's actually a hammer forming, but still you need a confirmation. So maximum, you only can initiate one lot. Remember what I told you, scaling in, right? Don't put everything in, just maximum one lot. Okay, that's the message for CTOS. So probably we'll end here, and then I'll pass the sessions back to Rose.
Yeah. Thank you very much, Joseph. Okay, it's a very informative sharing from Joseph. Thank you very much. And I believe the participants have gained some knowledge, okay, from Joseph's sharing. All right, let me just share this. Okay, to all the participants today, thank you very much for staying until the end of the session. Okay, for those of you who are interested to participate, to participate in the SMFI campaign or to find out more about the SMFI, please type in the Q&A box. This one keep on changing. Okay, SMFI, your name, mobile number, location or city where you are now. Okay, so these are the things that you need to type into the Q&A box, right? Okay, just for information, we are conducting this session on weekly basis. Basically, this is for educational basis. Educational basis conducted by Joseph. All right, and we will be sending out the invitation on weekly basis. So if you're interested to join this, just stay tuned. Just wait for our next invitation. Okay, we hope to see you again next week. All right. Okay, so thank you very much. Joseph, is there anything else that you want to share with your participants?
Yeah, no. So any questions, just remember to post the rules. But anyway, I shall see you on my next sessions again.
Yeah.
Right.
And to all the participants, I know that you have key in questions. Thank you very much. We really appreciate that questions. It's just that we do not have sufficient time to answer all the questions. We will try to do our best to answer all your questions in the next event. All right. Thank you very much, everyone. Stay safe.